Welcome to Inside the Chamber. I'm Nikki Anderson, the President and CEO of the Naperville Area Chamber of Commerce. During this episode, we will be meeting with John Miller from Klein Hall CPAs, Ron Davidson from BMO Harris Bank, and Aaron Doppel-Wickstrom with Raymond James & Associates. Today's panel will help us better understand the world of finance as it pertains to the health of a strong business. If you own a business, work for a business, or are growing your business, you won't want to miss this edition of Inside the Chamber.
Inside the Chamber is brought to you by presenting sponsor, Naperville Bank and Trust.
Great, so today our discussion is all about finance, and I'm thrilled to have this discussion today because I think there seems to be a little bit of uncertainty that businesses are a little worried about. You know, what's going to happen over the next 6 months? We have presidential election, our state is a little discombobulated, so I think there's a lot of questions that businesses have, so I appreciate you coming and sharing your expertise.
Absolutely.
So my first question is, what are some factors that determine the financial health of a business? What do you think about that?
Factors that determine financial health, you know, in my perspective as a banker, I'm looking at things such as the strength of a balance sheet, you know, low leverage, so that if there's a hiccup in revenues, that company can survive it and move on. And when I'm looking at a company on the income statement side, just numbers-wise, is revenues growing or stable? Is profit margin growing or stable? Is net income, which is your bottom line return, is it consistent and growing? Those are those things that help me understand the strength and profitability of a company.
Awesome.
Absolutely. And going off of that, really making sure that there's adequate reserves within the company so that if they do have a year or a couple years where maybe the profit margins aren't very good, they have something that they can go back to and utilize to ensure they keep their doors open and their employees on hand, and just being proactive within their company. You know, if they need to freeze salary adjustments, then they do that every once in a while.
Yeah.
And then keep their employees feeling like they're part of the organization. That contributes tremendously to the financial health of an organization because that ultimately is your support. That the team in the office and the team outside of the office, keep them in the loop, and you'll definitely have a healthier company on the financial side.
That healthy culture.
Absolutely.
Right.
Absolutely.
And then digging down a little deeper than that, I would also look at their revenues, the types of revenues that they have with regards to, let's say, customer concentrations. If you have it's great to have a nice big customer, but there's a lot of risk associated with that. And so what we try to consult with our clients is to try to expand that, get more diversified so that you're no more than 10% of your clients represent your total sales.
And that's such an important point because
hit
I
the
think
nail on the head.
there's a
You really
mistake
did.
that there's this assumption that they will always be with us, and that's
Right.
probably the worst assumption. And just as you tell us, make sure you diversify your investments,
Yes.
right? It should be the same, I think, with customers, and I think people forget that. So that's a really valuable point.
That can impact your pricing, your ability to increase prices.
100%.
Absolutely.
In other areas, when I look at a client, I look and say, well, what is their ability as far as increasing their prices, let's say on an annual basis? Are they able to keep up at least with inflation? Because that will also tell you whether or not your products and services are the demand that your customers are really looking for what you're delivering to them.
Right.
So.
And so I'm going to segue into the next question, which is, what's the biggest shift that you all have seen in the world of finance or in the financial industry?
Definitely technology.
Absolutely.
I think that every client needs to look at what the technology is out there. The answer for today is different than it was even 2 years ago.
Right.
So when we look at a client's business, we will have them assess their automation, their processes, their integration of different softwares so they can get more done, more information with less time and less money.
Yeah, great.
And to add to that, because I would say technology is number one for sure. Also regulation. Think about the health insurance regulation now that you have requirements that you have to go along with as employers. And now we also have a even more strict Department of Labor regulation regarding fiduciary laws. So in our world with financial planning and doing retirement plans, there are things you have to comply with. If you have a company of a certain level, you have to have a retirement plan in place, otherwise you can get penalized. And that's coming down the pipeline. New legislation just came out this year earlier, and financial firms are still digesting it, and so it's not supposed to be enacted till next year, but it's something that business owners should be talking about and aware of. So not only seeing the opportunity and advancements like in technology, but also the areas that they need to make sure they have covered so that they're in compliance on the fiduciary standpoint.
That's great.
And being more transparent.
Oh, 100%.
That's what everybody's looking for. Everybody's looking for that transparency. They want to know what's going on. If they're an investor, if they're a lender, you want to know that what you're seeing is the reality.
Well, and that's a great point. So from a shift in the world of banking, what do you see has been the biggest shift? Because obviously lending has changed quite a bit over the last few years.
And the economy is growing. We see a lot of opportunities for our clients in growth and expansion. But technology, just like you said, so how clients are using a bank is changing dramatically. Over the last, I'd say, 10 years, the walk-in count of people coming into a branch has changed dramatically versus how they use their bank, how they disperse funds by using online capabilities, how they collect funds by using online capabilities, how they use a bank's online banking platform to provide them with the reports they need to understand their cash flow and their liquidity. So it's changing dramatically, and we as an industry are adjusting to that. I'm lucky that I'm with a bank group, and there's several other good ones out here that have kept good brick and mortar, because you got to have locations. But technology and using online services is expanding, and we need to keep up with it, and clients demand it.
Right. Fascinating. So in that, there are mistakes that businesses make, go figure.
Yes.
And I even think when I started my business, how different it was when it came to getting a loan or having a bank provide some capital. So what are some of the mistakes that you see businesses making, and not just startup businesses, but maybe even businesses that want to expand? And I know you mentioned, the things that you look for, but what are some of the mistakes that they make?
One that comes to mind with me over my experience is overestimating your sales.
Oh, yes.
And underestimating the amount of time that it's going to take to become profitable, especially if you're a new business. When clients start a new business, they're very excited and they're very positive. And I look at our role as trying to get them more to a realistic viewpoint.
You're the killjoy.
So if they make assumptions, let's prove out those assumptions, because if there's going to be mistakes, let's find it out on paper. Let's prove it before. Yes.
Be conservative.
I don't want them to find it out with their money or somebody else's money. So I would say that would be an area that we would look at.
It's that optimism, enthusiastic optimism that you see. What do you guys think?
Well, I see failure to adequately prepare. Either if you're starting a business or if you're going to that next level with a quality existing business. And tagging on to what John Miller said, being conservative. But when you're thinking through, you have to have a business plan. Even if it's just to get to that next step, you have to think through what depth and quality of a team you're going to need to make that happen. How many employees, what your revenues are, what your expenses are. And you want to break that out, especially if you're a startup business, for at least the first year on a monthly basis. So you're projecting out revenues, you're projecting out your operating expenses, and it helps you, it's an eye-opener. As you know, being a small business owner, utilities, rent expense or mortgage, payroll, all the things. And when you put that out on paper, knock it back. Be conservative, because the best thing you can do is be prepared for the worst case scenario so that you can succeed. So
I actually tell business owners from the financial planning standpoint to not plan on being profitable for 5 years.
Wow.
Which is very conservative.
You're scaring a banker.
I'd rather them be overly prepared than underprepared. If they're profitable before then, great. They just have more adequate reserves in the bank. And it also equips them to not later on then try to be a jack of all trades and not outsource, because outsourcing costs money. And if they don't have the resources available, that's a huge mistake I see businesses make after they get into the 1, 2, 3 year mark. They are thinking, oh, I'll still do my bookkeeping, I'll still do my payrolls, and that's a huge mistake I've seen businesses make.
So with that, I know there was a quote that I heard one time that when business is great, people tend to celebrate, and when business is bad, they wonder what went wrong. And one of the things they said is that it's when business is doing great that you really should look at why are we doing so well versus getting into that when it falls apart or when you're having a slow time. You don't really pontificate. You should pontificate when things are great. What are your thoughts on that?
I agree with that. I think you need to reassess what you're doing on a regular basis, in good times and in bad times. With regards to the planning, the documentation, that doesn't go away. Some people think, okay, put together a business plan because the banker wants it.
Right.
Really, it's a tool for the business owner to use and employ as their business continues down the road.
Right.
They really need to document the decisions and assumptions that they're making, so when they can compare that to actual results, they can see why maybe the outcome is different, what they expected, and you learn from it. It's a continual learning process.
So you hold yourself accountable with that. It doesn't gather dust on a shelf. You look at it on a quarterly basis, on a monthly basis, and you tweak it so that you keep moving forward and making your goals a reality.
Yes.
Yeah.
Absolutely.
So once they're into their second, third year, maybe things are doing okay, they're actually showing a little bit maybe of a profit. Once they're in that groove, what kind of mistakes do you see businesses making? Is it try to grow too fast? Is it hiring before they're ready? Is it, like you said, outsourcing really when you shouldn't be yet? Maybe being a little too optimistic again? What are your thoughts about that?
Growing at the expense of profitability. I've seen that going into an area that you don't have the expertise in. People will assume that what they did to bring them to that point, they're going to be just as good in the other new area. And if they don't have the experience in that area, now you're putting yourself in a position of higher risk. And so that's something that you really need to be keen on, because you really need to focus on what you do well. You need to continue to reassess that, and also listening to what your customers want. Listening to your customers, talking to your customers. I think that when we go back to a big mistake, you need to know what your customers want, what they're looking for, and then find a way to devise those solutions for them. Because if you can keep your customers happy, you're going to be in business and you're going to be making money.
Absolutely. Well, and as they get into these other areas where they're taking on different lines of business that aren't what they set out to do in the first place, they start forming silos too.
Yes.
You have little subcultures within your culture, which isn't healthy for the growth of a company long term. I mean, even major corporations now come along and say, oh, we need to dismantle the silos. And there's 10,000 employees there. So you wonder, when did that start happening and how did it get to that level? Well, it starts early.
Right.
And so being mindful of sticking to what you're offering, products and services. And again, that outsourcing piece, I think, is so crucial. At what point do you decide this is important for me to do and this is not? This is revenue to producing and this is not. This is something I could bring in an expert and it'll take half the time, which frees me up to do the business side.
Absolutely. Touching on what John said, though, on that second or third year, what mistake they may make is growth in revenue, just like you mentioned, is great. But I tell you, a banker, and what you need to look at yourself is bottom line profitability, cash flow, maintaining that margin, because that's your take home. That's your buffer for your company, and that's your reward for how hard you work. So maintaining that net income, that cash flow is much more important to a banker than seeing the revenue.
Cash
Grow and
flow
grow and
is
grow.
king.
Oh,
And on that note,
absolutely
we're going to
is.
take a break,
Good.
and then we'll be right back.
Naperville Bank and Trust has the expertise, knowledge, and experience to help you reach your business goals.
We would prefer to work with somebody like Naperville Bank and Trust. They're engaged in the community, they're able to help meet our financial needs, they understand us as a business.
They provide all the tools that you would ask that we as a growing business need of a bank. Most importantly, to me, it's a great personal relationship we have with Tom and John and our bankers.
It was the best thing we could have done in banking. And banking can be very cold. What the bank brings to us is that warm feeling when you come into the bank and people say, "Hi, Greg."
It's about being part of the community again, about being a name again, about having credit for who your business is instead of just being a number.
Naperville Bank and Trust. Bring it home.
So I know one of the experiences that I had, I learned it a little later in the game when I had my business, is not taking full advantage of my financial experts' insight. It was sort of like, well, you guys just give me the money, and once you give me the money, then I'm good. Or once you give me the advice on how to start my business, I'm good. So I think that people tend to underutilize
Absolutely.
experts.
Yes.
So what would you say is a way that your customer can help better utilize your talents, expertise, and insight?
So I'll answer it this way. I tell you, there's no better compliment to this banker or our bank group than earning the position of being a trusted advisor to our clients, because we have, I've just seen over the years, there's, and it's not meant to be negative, but two types of relationships that you have, or clients. You know, the ones that they want a relationship with you. They want the advice, the counsel, they want to have good communication, and you give it back to them tenfold in terms of ideas on how to grow revenue, cut expenses. Here's some potential clients for you. Here's a group of trusted advisors that you need to know in terms of good accountant, good corporate counsel, good insurance agent, good real estate broker. And then there's another client that is just as important, that treats you in a professional manner as a tool. They pick you up when they need you and they put you down. Well, I tell you, when you build rapport and have a relationship with a client as a banker, we have a lot more fun.
Yeah.
I smile once in a while. But we bend over backwards to help them, because that relationship turns into a business, good rapport, business friendship, and personal friendship. And boy, we have such a vested interest in helping our clients grow revenue and profitability, because they're stronger, more profitable relationships for the bank.
Right, absolutely, absolutely. So, what do you guys think?
I was going to add that sort of what you had spoken about before is being proactive and thinking and reflecting on your business during the successful times, and really during all times. So having regular financial meetings with your advisors and bringing them into the room. Don't just bring your business partner, don't just bring your family members or whoever is part of the business, but also your advisors, so that they're staying abreast of all the different changes that are happening, and that they can help you weather whatever potential storm could be coming in to your wheelhouse that you may not even see yet as a business owner, and they have that different lens.
Sure.
Yeah, that's awesome.
And I would add to that, bring your advisors in as a team. I'm a big believer over the years that the team approach works the best. Have a meeting when you have all your professionals in the same room with that business owner, so that they can all hear the story together, collaborate, and come up with a collaborative best solution for that situation.
One goal.
It works so much better. And everybody's in sync, and now when we're working together, everybody's on the same page.
Right.
There's no miscommunication, and you have the best solution for the business owner.
Right, one goal. Everyone is on the same page.
And
yes.
Why do you think sometimes that maybe people aren't asking? Because, I mean, when you talk about all the facets that you cover, and you could even be a referral source for your clients, and same with you guys. I mean, why do you think sometimes people assume that they can't come to you and say, hey, look at my P&L, what do you think?
Two things. Two things come to mind very quickly. One is time. I don't have the time. Yes, I know I need to do that. I know that's a great idea, but I just don't have the time. Second one is money. And so what we've done actually is we don't charge for phone calls.
Right.
We are encouraging our clients to call us, because it is so important for us to have that relationship with the client, so we know what they're doing, what they're thinking about doing in the future, so we can use our combined knowledge to help come up with solutions, maybe solutions they're not even thinking about, how it correlates with what they see as their business going forward.
That's great. So ask your financial people for help. They'll help you.
Yes,
Right.
That's
absolutely.
awesome. So this is such great conversation, and I don't want to end today's show without you all sharing your expertise and the piece of advice that you might give someone in business. And whether it's a startup business, whether it's a new business, or a growing, expanding business, what piece of advice might you give? And Ron, I'll start with
Oh,
you.
I tell you, build your internal and external team well. Internally, you need to have the expertise to handle the bookkeeping, the sales, the operations, the IT, the HR. And if it's one person, just get your arms around the education. You need to make that happen. Externally, you really need that team of people that have a vested interest in your success. A great accountant, an accounting firm, great corporate counsel to start yourself off, great banking relationship that the banker has to earn, but get that in place. And insurance, boy, what an expense. Get a great insurance relationship going with advice and rapport.
Awesome. Awesome. John?
What I would say is having a person know what their numbers are, stay involved with your business, know what's going on with your business. Don't just leave it up to someone else. Really know what's going on. If there's something you don't understand, ask the professional, ask the CPA, financial planner, banker, insurance, whatever that area is, so that you do understand what's going on. Also, know what your definition of success is. How do you compete against other businesses? What makes you different?
Yeah.
Define that the best you can, and then build your business structure around that so that you are not exactly the same as everybody else out there. You want to be known for something.
Your unique selling proposition,
Yes.
right? What is it?
And then stick to that.
Right, yes.
Well, and having a well-rounded plan as well. I'm sure that your business is not your only obligation. You likely have a family, friends, spouse, children. And so ensuring that you have all your bases covered so that when things do get stressful, because if you're a business owner, whether you're a startup or you've been in business 20 years, things get stressful. When things do get stressful, you're not adding insult to injury because you don't know if you can send your kid to college, or you don't know if you can retire at the projected time you would like to. So again, making sure that you have a well-rounded plan to ensure that you can enjoy every phase of life, even when it's tough.
Yes.
Yeah. And it's interesting because I remember in the chamber probably 15 years ago, we had the mentor program, and one of the things that I used to ask people was, on our first meeting, bring your business plan. How many people didn't have a business plan?
Yeah.
And they never met with me again because they didn't want to put together a business plan.
Right.
So do you see that? That
all
it's
the
like, I got a great idea because my mom told me or my wife told me. Yeah, it's a
All
great
the time.
idea.
Yes, and it's
Failure
a
to plan.
tool.
Yeah, so
It's
what
a
do you
tool
do?
for them? You try to talk to them and educate them in terms of how important it is that spending 5% of your week towards planning on your business, stepping away from it,
Yeah.
is going to pay off for what you're trying to really achieve in the future. So they need to correlate that those activities will bring them to achieve their goals.
Well, it's like the EMyth Principle. If you've ever read that book, it talks about the technician, which is the actual business that you do, the manager, which is you managing your time and deciding what you outsource versus what you do. And then there's the entrepreneur side. And people oftentimes negate the entrepreneur side. They're the manager, they're the technician.
Right.
But the entrepreneur side is casting the vision, circling back to ensure you're staying on track, and doing regular check-ins with yourself, your advisors, your support system, to have that added layer of accountability. And so many people miss that step. They think, oh, I'm good at websites, so I'm going to start a website business, right?
And we have to give them the reality of it. I mean, all of our years of experience, we've seen quality reasons why companies succeed and fail. And when you tell someone you need a business plan, you need a roadmap, you need to do these things, we'll help you get there with our circle of services and relationships. They need to listen, and we're just there to help them become successful.
Yes.
Yeah, and I think that that's so important because, to your point, I used to see it all the time when I was doing consulting work in the fitness world. How many people? I'm a great therapist. I'm a great instructor. But look at all the other things that you're letting go. You're not paying attention to the business part, and I think that's probably more common than not.
It is very common.
Yeah. So I think maybe having that conversation first with somebody saying, saying, hey, I have an idea. And could they do that? Just come to you and say, I have an idea?
Oh,
or
I love that.
What would you, okay.
That's an opportunity to have a great qualified conversation and add value, and that's what we're supposed to be doing here, is adding value to help them figure out how they're going to get from a great idea with some certain expertise to a successful, profitable, long-term, sustainable business. Love it.
And what about the people that are thinking about expansion or growth? How different does that look? Because obviously if they're profitable, I mean, you have to look at it from that perspective. But what advice do you give people that are looking to grow, or what might be different from someone that might be a startup?
You want to talk about the expectations. Why do they want to grow? What do they expect to receive from that?
Sure.
And make sure that it's clear in their mind as to why they want to, let's say, change their course. Because every time you change course, you're taking risk. And with the risk, there has to be some sort of a clear reward.
Yes,
Sure.
I love that, asking why.
Yes.
Because greed is a powerful motivator. Yes, a lot of times people want to grow because they just want the bigger paycheck, the bigger pile of money, the bigger business.
Right.
But that's not a good motivator. So what is the ultimate goal there? And then you can start talking strategy. Does growth look like increasing your customer base? Does it look like a smart acquisition of somebody else? Acquisitions can be a very powerful way to grow.
Absolutely, and utilize your partners. Your bank, if you're $5 million trying to get to $7 million with an acquisition or a new product line, we love that. We're going to spread numbers for you. We're going to give you industry analysis to help you understand this industry, this revenue, the potential for market share and profitability. We love to do some analysis for our clients to help them get there.
Yeah, that's awesome. And go ahead.
I want to throw in a quick story.
Yeah, please.
This is from years ago. There was a woman that came to me, and she was very excited about purchasing a White Hen Pantry store.
White Hen.
And so she comes to me and she says, okay, this is my life savings. I said, okay, high risk. This is what I want to do. This is the location I want to purchase. And I sat back and I thought, oh my gosh, is this really in her best interest? So my next question was, well, what do you know about the convenience store business? Yeah. Have you ever worked in one? She said no. And I said, this is my suggestion for you. Why don't you go get a part-time job working behind the counter for 3 months, 6 months, see if you like it, understand the business. Yeah. And then if that fits, then look at purchasing that business.
That's great. Well, we could talk about this for probably another hour. So I just want to thank you so much for being with me today. Ron, John, Aaron, thank you so much. And this is why we bring these programs to you each month, so that we can help educate you to make great decisions and be successful in your business. We'll be right back. Thank you for joining us for Inside the Chamber. We hope you found the information valuable. We'll continue to provide quality content in 2016, all designed to help you and your business flourish. Please join us for our next Inside the Chamber as we discuss what you need to know when it comes to human resources. You won't want to miss this interesting edition of Inside the Chamber.